All right, I'm Dave Mecklenburg from TigerStar Trading. Today we're going to talk about floor trader pivots. But before we get into it, I remind you the high degree of risk in trading. If you've been trading for more than one day, you know that you can and will lose money trading. Only trade with money you can afford to lose. Hey, some of you guys are new. Just want to let you know I learned to trade the same way as you. Read a bunch of books, took a bunch of courses. Number two, no one has all the right answers. You're going to make adjustments for your own particular situation, your account size, your risk tolerance, level of skill, all that good stuff. And hey, I've been doing this for almost 20 years now here. I'm an expert how people like you lose money trading, and the overwhelming majority of people who attempt trading do lose money. So use me as a resource, ask me any questions. I'll stick around and answer any of your questions, anything to do with trading. Just want to remind everybody, trading's hard. If it were easy, everyone would do it. I understand all the marketing and all the hype. Conveys a message that it's easy, but most of those people are lying and most of those people are gambling. So we're going to talk about actually trading, looking for a small edge, exploit that over and over again. All right, no one sells money printing machines. There's nothing you can purchase that's going to guarantee you $500,000 a day. I don't sell anything, but there's nothing I'm going to tell you that's a money printing machine. I'm going to give you the tools. The only way you're going to learn is put in the reps. If you don't want to put in the reps, well, I guess it's not for you. If you don't want to put in reps on anything, well, I guess trading's not for you. And again, for a lot of you people listening to this, trading actually isn't for you. All right. And then, hey, even though I'm not going to give you a money printing machine, hopefully I can save you hundreds of hours. And the best thing I can do for you is prevent you from blowing out your account. Again, our keys to a trading strategy, I do this every time, but we'll just burn through this quickly here. We want to control our risk, think about the downside before thinking about the upside. Hey, a stop's one way to doing that, or the most obvious way. Got to control our costs, commissions, again, the most obvious thing here, but wide spreads and slips are cost. If you can't get a good fill, that's a cost. Simple is always better than complex. Range, volatility, whatever trading needs to move. Right? Penny stocks don't move, but hey, S&P 500 stocks do. Heard the trend is our friend. Whether or not we use a trend filter, hey, are we above and below the 50-day moving average or the 200-day moving average? Momentum, hey, that trend is speeding up, or the near-term trend is moving in the direction we want to trade. Confluence of leading indicators. So again, indicators that print across the price charts, things like Fibonacci, Elliott wave, major moving averages, trend lines, recent highs and lows. Confluence is two or more of those line up. The point of that is that we know our entry and exit when we take the trade. So we're actually going to use floor trader pivots as our leading indicator today, and we're going to know our entry and exit before we take the trade. That's why it's a leading indicator. And then, hey, your target's always significantly larger than your stops. As an individual trader, you're going to be right about 50% of the time. I know we're wired to look for that 80, 90% correct system. Doesn't exist, but you're going to be right about 50% of the time. You can squeeze out 52, 53%. Hey, even better. But how do you make money? It's because your winners are bigger than your losers. Easier said than done. We're wired to hold on to our losers. It's not a loser until you close the position, right? So it might come back to break even. The problem is losers become even bigger losers. And we lock in our gains too early, but winners become even bigger winners. So that's part of the repetition, part of training yourself to do what's not natural to you, doing the opposite of what your instincts are. But money management is going to be your edge. All right, so again, if we're day trading, this is a day trading strategy. I'm going to show you, like, this is a second way to trade that momentum list that I put out every day. And so you can use the exact same list because that's kind of my setup. But here again, if we're day trading, I'm looking for 4 to 6 cents per share per trade. Hey, what does that mean in dollar figure? Well, multiply your share size to get a dollar figure. Doing 1,000 shares every trade, that's 40 to 60 bucks per trade. Maybe you can pull 100 to 150 trades per month and then pull 4 to 7 points out of the market. You can multiply your share size, get a dollar figure, 1,000 shares would be $4,000 to $7,000. So you might need to step up in size at some point. Hey, the rules are rules. You got to follow the rules. This looks like it's discretionary, but there's real rules here. Trade it like you're a computer. And again, remember that money management can be your edge. The rules to most focus on are how big should be your initial stop? What's the break even? How do you trail? So again, this is the point where again I show you that if you can catch a trade early, momentum, that big winners happen all the time. That we got these big bars are all over the place, right? Big bars. Wide trending day. Market picked a direction and went in that direction is always the best way of doing this, right? So big winners happen all the time. Even better, you got a tiny wick in the direction of the trade, right? This is a big wick in the direction of trade. That's also a big wick here. So if it's a big wick, we're gonna blow this up. Hey, it looked like it was gonna go in one direction and went in the other direction. So maybe we got stopped out, but tiny wick, if it picked a direction, when that direction followed for the day, big winner, right? So small loss, big winner, right? Same for shorts too, are these red bars here, right? Hey, if there's a big wick in the direction of the trade, right here, that's a big wick. Oh, it looked like it was going up. We went long. Oh, nope, it was a down day. Small loss. Tiny wick in the direction of the trade, right here. Oops. Hey, it picked a direction and went in that direction, right? Small loser, big winner. Very simple way. If we can be right 50% of the time, this is how we can make money. Cut your losses once you're outside of normal volatility. Ride your winners to even bigger wins. If we're day trading, what's the biggest possible win? Well, usually a function of time, so hold towards the close. All right, so again, momentum trading, just to review, we did this last week. Again, we're looking for a bull or bear bar. Bull bear, daily bar closing near its high for a long side setup. Bear bar, daily bar closing near its low for a short side setup. And then we're looking for tight spreads within the first few minutes. That's why I do S&P 500 stocks. All right, so here's your bull bar, closed near its high. If we blow this up 5 minutes, you can see it kind of trended in the day, and our close is right off its high. Here's not as close here, but still closed near its high. Again, kind of trended near the day, closed still near its high. Bear bar, same rules, only opposite. Again, trying to close near its low. Again, downtrending here, popped off the low. Closed near its low. Again, same thing going on here. Kind of a little bit more rangy here, but again, closing off its low. So the point here, it's momentum, right? Is that our deal was we were gonna follow the trade. When it breaks that low the next day, that triggers the trade. Or if it breaks the high the next day, that triggers the trade. So this is the change here. I'm gonna use floor trader pivots. This stuff should be built into your chart. I'll show you my trade station here before we shut down. But this is the floor trader pivots. If you were going to draw your own lines. You can stop this, but like I say, it's built in, so I'm not really going to go over the specifics. But what I really care about, we got these 5 levels here. There's actually R3 and S3 on this, but I don't care about that. But we're going to go pivot to pivot in this stuff. Right, so here are our pivots. So get the yellow here. I didn't do this yellow because you wouldn't be able to read it, but the yellow on my chart. So this is the central pivot, right? S1, R2 are going to be S1, resistance 1, support 1, right? But you can just see, the point I want you to see is how They kind of act a little bit as magnets sometimes, or you can go pivot to pivot, or we consolidate around stuff. Sometimes it breaks through, sometimes it consolidates, right? Another chart, kind of pivot to pivot, bounces off, little support and resistance, right? Little support and resistance, bounce through and back up. But like I say, some of this may look a little weak, but you can see kind of, sometimes we can go pivot to pivot. And we have consolidation, support, resistance at these levels. All right, bounced right off, right. This one bounced directly and then directly down. So you guys get this point here that we're going to use these pivots as our leading indicator. Instead of a break of the high or the low on the bull or bear bar, we're going to do a pullback to that central pivot. All right, so instead of a break of the previous day's high or low for a short, our entry is going to be a reversal through the central pivot. This will be clear when I pull up the chart. Again, the same rules going on. Initial stop 20 to 40 cents, break-even stop 20 to 40 cents. Our targets in that momentum was to use those fib extensions, but we're going to use the R1 or S1 pivot, right? So an R1 pivot for the long, S1 pivot for the short. Those are our targets. Hey, again, most trades won't trigger. Right, so again, this is how we would do that momentum. Bull bar, when it breaks the high by X amount, whatever we picked. In this case, it was 10 cents. Maybe it triggered right away. Maybe you didn't catch the trade early, but then it triggered here. So again, we're breaking the high of the previous day's high. And this is target 1, target 2, those fib extensions. Right, instead, if this were the high here, this right here of the previous day, instead of breaking that high to trigger a trade, again, we're going to pull back through the central pivot, the yellow lines, go down through it, close, at least one close, then go back up and go pivot to pivot. So again, my kind of methodology that I tracked over a while, I use 6 cents above. So go down through the pivot and then back up 6 cents through, and then I get inside that pivot here by 3 cents. If you want to know my exact rules, doesn't matter, you can play around, but we're going pivot to pivot. Again, pull back down to the central pivot for a long side, right? Pulled back and then back up to that pivot. Right, same thing happened again. So if this were the previous day's high, instead of a break of that high, pull down through the pivot, down and back up through it, pivot to pivot. Short side, same rules, only opposite. So hey, if this was the low previous day, instead of breaking that low the next day, pull back to the pivot, central pivot. So that's up through the pivot and then down, and we go to the support 1 pivot. Same rules again. Hey, if that was the low of the previous day, nope, we're not going to take a break of that. We're going to come back through our pivot, through the central pivot, and then down to support 1. Pivot to pivot is the move. All right, so here's some losers just to show that. So again, here's my pullback through the pivot. This actually gapped up, so we waited for it to come down. Got at least one close here before a trigger. So we would have triggered here, and then using the low of the day as the backside stop, which would have been right there, stops us out for a loss. So again, gapped up, same rules, like I said, gaps, let it come down, close, and then trigger. It's triggered, and then again, using a stop, generally the backside, low of the day, stop this out. Here's another one, same thing going on. Hey, gapped up, came down through. Again, we're doing a pullback through that pivot. So here's our up bar. Here's our trigger. And then stopped out on the low of the day. Short side, same rules, only opposite. Actually, here's my, actually had a bar close before it triggered here. So that's actually went through the pivot and then next bar triggered. So actually my stop's on the back side of that. This actually didn't trigger. My line's a little thick, and then we have our 2-hour cutoff here. No trades with 2 hours to go. So that's the trade right there. Again, same rules as the momentum stuff. Here's one, would have triggered, came down. It broke the high. For momentum, in this case, we're going to do the pivot, came down, one up bar, triggered here. And then at some point you want to trail. I wanted to show you, hey, I would have trailed probably on the backside of I want at least 20 cents and with a down bar. So on the backside of this right here would have been my trail. And then it would have knocked me out. So we were pretty close to hitting the target. So moving those stops once you get close to hitting the targets. Same thing going on here. Here's your trigger. Up through the pivot, down, triggered here. And then we got a little, almost hit the target. Here's our little pullback, backside of the pullback. Put your stop, almost hit it again, but then eventually hit the stop. So it depends how active you want to be on these trailing stops. Like I said, I like to look at the chart, put it on the backside of a down or up bar here. In this case, up bar for a short. But certainly use at least 20 cents. Give it at least 20 cents of room. All right, so hey, I tracked this thing. I tracked this strategy like I did the momentum and the breakout for actually this one for a couple of years. So like I say, 4 to 6 cents is pretty good. This did 5.8 cents per trade. 83 points out of the market. It's 2017, did 5 cents, 2018, 5.2 cents, 2019, and 5.5 cents again, 2020. So very simple strategy, different way to do momentum, different way for you to play with that momentum list that I do every day. 4 to 6 cents per trade, what you're looking for. So this strategy did over 5 cents for the 4 years I tracked it. 100, 150 trades per month, I think is a good idea. Again, you can change your rules more or less. I went more in detail on kind of changing your rules last week on that momentum. But hey, 4 to 7 cents per trade, doing pretty well. Rules are the rules, follow those rules. And again, money management are the rules you should really be playing with. All right, so that's kind of to the point here. This is yesterday's momentum list. So let me remove my moving average. So here's the pivots. Like I say, it's built into TradeStation. I'm sure I've customized what these lines look like just a little bit, make them easier for me. But long side, come down and back up. And I use 6 cents, so this actually wouldn't have triggered. So go down and up. No trigger on that. This one didn't trigger. This is a smaller list here too. Again, the stop's too big here. At some point we got to cut it off here too. So if it goes down to the next pivot, I'm going to toss it. Here's one that looks like it probably would have triggered and then stop this out. So here's a loser. No trade, and then downside. So here's a winner, up through the pivot and then break down. No trade, no trade, no trade. All right. 6 cents here. So a trade would have triggered too late in the day. Oh, and here's another one, perhaps. So this would have triggered, maybe this would have stopped this out if our stop's on the back side, but then trigger it again. Maybe break even, maybe squeezed out a few cents. All right, so any questions on this strategy? Again, it's on the momentum list. If you're new, I'll include the link to get on the list, or just learn to trade, join the daily watch list. That's our daily list I put out. 2 lists on that. Again, this is the momentum list. Different way to change that momentum, trade that momentum list. All right, I'll stick around and answer your questions, anything to do with trading.